Hello everyone and welcome back to my new video. Tesla Inc. report shares were tabbed as a top pick for 2022 by Goldman analyst Mark Delaney Monday following the clean energy carmaker's record fourth quarter deliveries earlier this month. Delaney raised his price target on Tesla to $1,200 per share, from a previous peg of $1,125, citing robust Q4 delivery that he sees as a signal for further unit growth this year and next. He also noted the group's vertical integration of hardware and software, alongside its ecosystem of charging stations, as well as its growth potential in solar and storage. Tesla said on January 2nd that deliveries for the 3 months ending in December rose 70% from last year to 308,600 units, its sixth consecutive quarterly record, taking the 2021 total to 936,172 units. Tesla is also improving its profitability as it brings production and deliveries to scale, with third quarter margins reaching 30.5%. An all-time high, as revenues reached $13.7 billion. Tesla will report its fourth quarter earnings on January 27. Tesla shares rose over 2% on Wednesday after the electric vehicle and clean energy company reported better than expected earnings in the fourth quarter and predicted that vehicle deliveries would grow over 50% in 2022 from the previous year. The high-performance electric vehicle manufacturer reported quarterly adjusted earnings of $2.54 per share, beating the Wall Street estimates of $2.36 per share. The electric vehicle producer said its revenue surged 64.9% to $17.72 billion from a year ago. That too topped the market expectations of $16.57 billion. As of last year, the Austin, Texas-based company had a net income of $5.5 billion, up from the previous record of $3.47 billion in 2020. 4Q21 FCF and Auto GMX credits impressed, but Elon's rant on FSD brings flashbacks to 19 when 1MN robotaxis were promised by YE20. Tesla shares tend to work the best when something new is coming, however. All new vehicles are now 23 SOPs and there is no Model 2 under development, as Elon would rather focus on the disruption than Optimus, the humanoid robot, brings, noted Jeffrey Osborne, equity analyst at Cowen. Tesla stock closed 2.21% higher at $938.72 on Wednesday. The stock slumped over 11% so far this year after rising just nearly 50% in 2021. Tesla Inc. on Wednesday forecast vehicle deliveries would comfortably grow by more than 50% year-over-year in 2022 despite persistent supply chain issues that it expects to be alleviated only next year. The upbeat outlook from CEO Elon Musk came after the world's most valuable automaker posted record quarterly revenue that beat Wall Street expectations. But the cautious note about supply chain woes showed that even Tesla cannot avoid the shortages that were pitfalls for many larger automakers last year. Shares fell 0.8% after hours. Tesla, which produced a few cars at its Berlin and Texas factories last year, said scaling up production there would depend on supply chain headwinds and the successful introduction of new technologies. Musk said that Tesla would not roll out new models this year but hopefully would launch its Cybertruck, Semi and Roadster next year. Tesla said it is not currently working on a $25,000 model that Musk promised in 2020 would launch in 3 years. Revenue rose to $17.72 billion in the fourth quarter, above analyst estimates for $16.57 billion, according to IBES data from Refinitiv. Tesla has fared better than most automakers in managing supply chain issues by using less scarce chips and quickly rewriting software. The automaker last quarter handed over a record number of vehicles to customers despite supply chain headwinds. We still expect to be partly or primarily chip limited this year, Musk said during a conference call, saying that chip limitations should be alleviated next year. He said Tesla's volume growth would comfortably exceed 50% from last year, meaning that Tesla expects to deliver more than 1.4 million vehicles this year. Tesla said the goal would be achievable even with current factories at Fremont, California, and Shanghai. Tesla said its Texas factory will this quarter deliver its first vehicles equipped with its next-generation 4680 batteries made in California as planned. Musk said he expected Tesla's vehicles to achieve full self-driving capability this year. Currently, humans are required to sit behind the wheel to drive the car if needed. I would be shocked if we do not achieve full self-driving, safer than human this year, he said. The number of full self-driving beta vehicles in the United States increased to nearly 60,000, up from a few thousand at the end of September. Tesla has been testing the improved version of its automated driving software on public roads, but it has said the features do not make the cars autonomous. Tesla's $4.9 billion in adjusted earnings before interest, tax, depreciation, and amortization beat the consensus estimate of $3.89 billion, according to Refinitiv. That appeared to qualify Musk for an additional options payout under his 2018 compensation package. Quarterly profits took a $340 million hit from payroll taxes related to Musk exercising options related to his 2012 compensation package. The profits also reflected rising raw material, commodity and logistics costs, and expenses related to warranties and recalls. Tesla is recalling more than 475,000 of its Model 3 and Model S electric cars to address rear-view camera and trunk issues that increase the risk of crashing. Tesla's stock price forecast. 30 analysts who offered stock ratings for Tesla in the last 3 months forecast the average price in 12 months of $1,076.62 with a high forecast of $1,580 and a low forecast of $295. The average price target represents a 14.85% change from the last price of $937.41. Of those 30 analysts, 15 rated buy, 8 rated hold while 7 rated sell. According to TipRanks, Morgan Stanley gave the base target price of $1,300 with a high of $1,600 under a bull scenario and $500 under the worst-case scenario. The investment bank gave an overweight rating on the electric vehicle producer's stock. No specific volume or profit target communicated in FY22, which is understandable given the factors outside of the company's control or ability to predict, specifically including supply chain bottlenecks, dual factory SOPs, and first-time implementation of new technologies. We believe the combination of the quality of the 4Q result and the outlook should leave consensus expectations largely unchanged. Investors who are in the 2mm unit camp for FY22 should bring numbers down, but we believe those in the 1.3 to 1.5mm range for FY volume have little incremental cause for concern at this stage, noted Adam Jonas, equity analyst at Morgan Stanley. Nothing truly narrative changing for Tesla bulls here. The long-term story is intact. We believe Tesla is on a path to be a 10-factory company producing as much as 1mm units, factory by FY30 with the recurring installed base. SaaS revenue coming into season with each successive quarter. Tesla's stock has held up surprisingly well in the midst of the broader market tech sell-off YTD. Several other analysts have also updated their stock outlook. Cohen and Company raised the target price to $660 from $625. JP Morgan lifted the target price to $325 from $295. Wells Fargo upped the target price to $910 from $860. Technical analysis suggests it is good to buy as 150-day moving average and 100200-day MACD oscillator signals a buying opportunity. Viewers can quickly glean another solid overall performance in Tesla's FQ4 and FY21 on its improving automotive gross margins. It also follows the momentum observed in FQ3 even as the supply chain snafu and chip shortages hit the auto industry hard. We think investors sometimes take Tesla's impressive deliveries growth and margins leverage for granted. Recall that the auto industry was buffeted globally in 2021. We can quickly glean where Tesla's deliveries and production grew tremendously despite being supply constrained. Tesla's deliveries and production rose about 87% and 83% YoY by FY, respectively. In addition, its deliveries and production also increased by 27.9% and 28.6% QoQ, respectively. Therefore, what else can investors ask for, given such robust performance in a tight auto chip supply environment? Looking at the charts above, it's unfathomable that Tesla was also battered with highly challenging supply constraints in 2021. CEO Elon Musk articulated, "This is a very important point that I think a lot of people do not understand. So last year, we spent a lot of engineering and management resources solving supply chain issues. We're writing code, changing our chips, reducing the number of chips we need, with chip drama central. And that was not the only supply chain issue. so there are just hundreds of things. And as a result, we were able to grow almost 90% while at least almost every other manufacturer contracted last year. This is all for today, folks. If you enjoyed this video, then leave a like, and if you are new, then don't forget to subscribe. Stay tuned for the future updates. See you till the next video. Thank you for watching.